Hi, I'm Monk and this is the Monk Way. Why is it so hard to buy low and sell high? It seems like common sense, but does anyone really do this correctly? We'll also look at a few stocks on sale to see if it's easy to do. Subscribe and hit that bell for more videos about stocks. I make them every day. And leave a like if you only buy stocks on sale. The oldest saying about the stock market is to buy low and sell high. If it was this easy, how come most people can't beat the market as a whole? This means it's not easy to beat 10% a year if you're trading stocks. The main problem here is that people are emotional, and we have the pack mentality. Buying a stock when everyone else is selling is going against the pack. Staying with the pack in nature is safer and tends to mean you survive. When it comes to stocks, going against what everyone else is doing is actually the right move. Let's prove this by looking at the 2008 crash. In the last crash, the market as a whole went down 50% over a few months. We can see in hindsight, the best time to buy would be at its lowest price. This is the time when almost everyone was selling out of the market. You would be seen as crazy if you put all your money in at that time. If you happen to do this, your money would have been up 270% since 2009, on a very safe investment. This is a 170% extra in profits compared to investing a year later. Using this basic example, we can see it's much better to buy when a stock is down. So let's apply this logic to today's stocks. Everything is overpriced right now. A good average PE ratio is around 15, but right now it's at 24. This means most companies are over 20, with prices being expensive compared to earnings. The only real value we can get is from companies that are on dips. Of course, some companies might be dipping for good reason. Not all stocks are good buys on a dip. Let's look at a few good companies that went down recently. We can see here that Apple stocks went on a 13% dip in February. This was mostly due to the technology sell-off around that time, along with weaker iPhone X sales. This news doesn't mean Apple is doing badly, just weaker sales for now. If you believed in them, it would be the perfect time to buy in. They're up 21% from that dip, a great return for only 3 months. Facebook also suffered a dip recently of 21%, due to the tech sell-off and the privacy scandal. This is a huge company, the main business isn't hurt but their reputation was hit. I can't say for certain this company would have kept going up, but this is a good bet. Looking at their history, they've been going up for over 6 years, unless this news was so bad that Facebook had to shut itself down, or a competitor really took advantage of the social media scene. Facebook would likely recover, and they did at a 21% increase since the dip. Amazon also experienced a 13% dip in recent months. Short-term news pushes stocks like this. Trump was hating on Amazon recently, which might have caused this panic sell. A month later they're up 17%. As we can see, if we buy solid companies on a dip, it usually bounces back for a quick return. I took advantage of the sell-off recently for a quick profit, buying Apple, PayPal, and AMD stocks on dips. AMD was the most profitable at a 39% return. I bought at the lowest point, a 30% dip for no good reason. They released a good earnings report last quarter, and this dip was speculation based on the weakness of cryptocurrencies. Buying at the perfect time, I received a 39% return in less than a month. Let's look at a few companies on sale right now. Walmart is on a 25% dip from its February price. They released a good earnings report, but showed weaker than expected online sales. Is this a good buy on this dip? It's more risky because retail in general is suffering at the hands of Amazon. People are pulling out because they think Amazon has more potential and offline retail will die off. I personally still believe in Walmart, so I bought $10,000 worth. Best Buy is a similar stock on a 13% dip. This is after a good earnings beat. Another stock I'm interested in buying because numbers are good. Again, Amazon caused this because Best Buy's online sales were weaker than expected. Snapchat is on a 50% dip. This will be a risky investment because there's a chance of it going down to almost nothing, but if you think they'll still be going strong for the next few years, this is one stock that can see 50% in returns fast. It's definitely not easy to go against the crowd and buy companies people are hating, but it gives you a better chance of a return than buying a company at its highest price. If you were in my stock market group, you would have access to all the dips I'm interested in buying right now, along with live updates of exactly when I buy these companies. Recent wins include AMD at a 39% profit so far, Facebook at a 6% profit, and my index fund is up $960 in 2 weeks. Look in the description for a 50% off coupon. This lasts a lifetime, but I'm closing this coupon in 2 more days. Don't miss out on this deal. Subscribe and hit that bell for more stock market videos. I make them every day. And leave a like if you like sales. Keep watching to buy stocks on the cheap, the Monk Way.